This is Kavita, and so good to see you in an afternoon show and not an evening show talking about the markets and investments. Welcome and thank you for taking time out today. Okay, so let us just begin with the texture of the market. Since we have you on board, so definitely we'll be talking about long-term strategies, but we know that you also hunt for some short-term trades that you can, advise our viewers and recommend our viewers in terms of strategy. Having said that, what's the market texture right now looking? How is it looking? After considering all the global uncertainties that are going around.
My sense is markets are looking fair value right now. So we probably kind of, I've been saying this for almost a month now. I think broadly speaking, if you look at, we are awfully close to September 24 highs. If you look at the market from a valuation standpoint, large caps are at broadly about 5% premium to 10-year average. Mid and small caps are about 20 to 30% premium to 10-year average. So all in all, feels like markets are fair value at the moment, waiting for the next big catalyst to sort of come through, which is 3 to 5 months away, in my opinion. And that catalyst is basically earnings or earnings upgrades. We need to see for the markets to grind higher, i.e. higher than the previous highs. The markets need to see earnings upgrades starting to happen and the end of the earnings downgrade cycle that we have been witnessing for almost a year and a half till now. So that's where we are on markets.
Mr. Bhattacharya, hi, Ankur this side. Since you have mentioned about earnings, what is your sense on the earnings which has already come out so far? And more than that, you have advocated about long-term investing. So hence, I want to understand what is your stock selection criteria in the current market?
So basically, the earnings at the moment on net balance by the time we see through the June quarter result season, which is what we are seeing currently, we would probably witness an earnings downgrade of about 0.5% to 2%, ranging between the two where we are looking at. I think I was reading somewhere of 13 to 18 industries that typically, are exposed to credit. Roughly 13 out of them are witnessing slowdown. So broadly speaking, there is an investment slowdown or credit slowdown, so to speak, in the markets overall. And the current earnings are reflective of the same. But the results that you see now are a function of what we have seen before. So hence, in that context, as we move forward and get towards, let's say, post-Diwali Q3, Q4 earnings, I think, two themes, I would say, will gain significant prominence. One is basically that of consumption recovery. And I think there are good chances of the same. And second is resumption of government capex. So those are the two areas that we would see will drive the earnings upgrade. That's the first part of your question. In this market, how do we go about selecting stocks? We are advocating of the three ways to go about investing. One is lump sum, second is STP, and third is buy on declines. At the moment, we sense that it's a buy on declines market overall from an investor standpoint, given that our market expectation is that of fair value and earnings upgrade is still about 3 to 5 months away. Accumulating the stocks as during decline, whether it's earnings related or broad macro related declines, is a good strategy for people to take exposure onto markets. Beyond this, it's basically fundamental driven stock picking, where our view is usually anchored between in the gap between the current share price and the intrinsic value of the company. Once we see the value open up between these two measures, we take a meaningful position on the stock. Otherwise, we wait in the sidelines to see, wait for the right opportunity to get in.
Good afternoon, Mansi this side. While I got an opportunity to have a look at your research notes, and I was so happy to see the positive conviction and confidence on the Indian markets. On a categorical front, you did advocate the fact that long-term investing is a rewarding experience and journey of each idea is different. Growth drivers, what are the immediate growth drivers and the long-term growth drivers which you do see in the markets helping the domestic market, and at the same time, do you see mid-cap having a potential of being recognized in the longer-term play as well?
Sure. So from a near-term standpoint, i.e. in the next 12 to 15 months, we see two themes playing out meaningfully. One is basically, the resumption of consumption or consumption recovery. We see this driven by five catalysts. One is the fact that oil has cracked meaningfully. Almost about 25% from peak, which is for an oil importing nation like that of ours is meaningfully positive. Inflation and interest rates are actually kind of down, almost about 100 basis points from the peak. It needs to pass on through the economy, but the event has happened. And third, monsoon has arrived a couple of weeks early and is likely to be 8 to 9% higher than long period average. And finally, Honorable Finance Minister gave us a tax break, which will also start to result into consumption spending towards the back half of this year. So all in all, from a near-term standpoint, consumption recovery is something that we see happening post-Diwali. The second is, of course, the government capex and decision making, which has been lacking for almost about a year and a half, has finally come on board. We see the effect of that come through in terms of earnings starting the back half of this year and hopefully over the next 12 to 15 months. These two will probably drive the earnings or maybe take us out of the earnings downgrade cycle that we are currently in. But that is due to happen in the second half of fiscal year 26. From a medium-term standpoint, I think the two or three big themes that we kind of that we see in the Indian market context. One is creation of brands. We think that over a period of time, the brands or the organized part of the economy will actually start to grow, and investors can take advantage of this theme. The second is market share gainers. We think that in a market which is kind of which is getting quite bipolar between particularly driven by the disruption of AI or the channel disruption that we are seeing with mobile commerce, we think all of this makes bipolar between the market share gainers and losers, the gap becoming too big. A prudent strategy focused on the same could be a good way to kind of make money. And the third long-term theme that we see is basically disruption. I think if you look at the last 100 years, probably one of the most disruptive times is what we are seeing, driven by data, driven by alternative sources of energy, and I could go on and on. So beneficiaries of the disruption and playing the same from a multi-year standpoint could be the third decadal theme that one could play on from an investing standpoint.
Trideep, a very positive commentary coming up over there, but then I really want to understand your tone on the mid-cap category specifically. I remember last time when we spoke, you were sounding very bullish, and you said, in fact, the markets have really gotten mature, understanding the real potential of the mid-caps. Are you still seeing that unlocking happening as far as mid-caps are concerned? More potential, more strength, better value?
So if you actually divide this into two parts, one is the valuations and second is growth. Let's start with growth because people usually start with valuations. If you look at FY25 and look at the three categories, which is large, mid, and small, mid is the category, or mid and small put together is the category which saw less earnings downgrade than that of the larger counterparts. That's point one that I would make. If you look at the current result season, the growth that we are seeing from mid caps are tad better than what we have seen in the other two categories. So very clearly, both in terms of growth and relative earnings cuts, mid caps have actually scored well over the last 12 to 15 months. That's one way, one part of the equation, one people should remember. And that's more got to do with the fact that the industries that are populated in mid-cap area are the sunrise industries in the context of India, and a higher weightage of the same in the context of the whole population makes the relative tailwind better, and that's why the lesser earnings downgrade. So that's the story on the earnings. On the valuation side, they're expensive though. They're expensive as compared to large cap. But my point is that we can still put together a bunch of stocks in the form of a portfolio where valuations adjusted for growth is still can still make investing sense.
The thing which I wanted to understand from you, Mr. Bhattacharya, the markets have rewarded pharma sector, but at the same time, if you look at IT, they have underperformed recently. What should be the long-term bet on both of these sectors? Because both are news-driven and much dependent on the tariffs and the threat which is coming from US.
My sense is that, particularly if you look at IT services, they're bouncing around the bottom. It's not that things are great, but, given the decision-making circumstances that the US is currently going through, I mean, in terms of their clients, it's hard to imagine, barring a global recession, it's hard to imagine that it's going to get a lot worse from here. So I think, but however, having said that, we haven't moved from there. So if you look at when they reported the March quarter numbers, the tariff-related tantrums were there. At the moment when they reported the June quarter numbers, the tariff-related tantrums are still there. So there's no improvement in the macro circumstances. And absent that, I would say that, the positive part of IT services is actually lacking. So I think the grind, it's going to be a grind rather than a run for the sector going forward. But I do think that if you think about 12 months from now, things could possibly improve, given that the tariff-related tantrums will go away. And second, some of the benefits, tax benefits that US corporates actually see in their core business might actually result in maybe slightly better decision-making towards outsourcing or IT, particularly in an AI-led world. So I think it's a grind near term, but hopefully better days ahead from an IT standpoint. Pharma is, we view pharma sector as a lot more bottom-up, stock-driven sector rather than one theme driving multiple factors. So there, I think it's stock-specific, domestic, from the results that we have seen so far, the domestic exposed companies are doing better. We are looking to play the themes like GLP-1, etc. in the context of the sector for secular themes in the context of pharma. But we view less on a macro-dependent way, more on a bottom-up way in this sector.
A lot of optimism, which is quite required at this juncture. On that note, Trideep, we let you go, but yes, we would want such interesting interactions moving ahead as well. Thank you so much for your time.
Thank you.
Well, moving ahead, and ET Now believes in investing, and also we help you